Pete, welcome back to another action-packed week of trading ahead. Last week we saw a whole lot of activities. Recap it for me and give me the 7 seconds that matter.
Well, good morning, Will. Here we are, Monday morning. We had the non-farm payrolls, which underwhelmed on Friday night in the US. We had equity markets, one-way traffic, all north, and we've got a continued sell-off as far as US dollar.
Well, here in Australia, the first week or two in November is always a good week to be sort of celebrating a particular event, and they say that's the Melbourne Cup. Typically in Australia, what that means is that nothing happens between November, the Melbourne Cup, and Christmas. But I don't think that's the case this year. Talk me through what's happening right now.
Well, we've had an enormous rally to the upside in November. If you didn't make $1 in November, give the game away. It's as simple as that. You've had equity markets just steamroll up and up and up. Will that continue in December? The liquidity rally, Father Christmas, and there's no doubt that US-led stimulus, ECB stimulus, harrowing numbers as far as COVID. And the only way forward, by the looks of it, is just to add more stimulus through.
Now, Pete, the stockings are out, the bells are ringing, and the bell that we want to hear ringing really is this feast of liquidity with the hope that we're going to hope that Santa keeps dropping down people's chimneys. What's the case? Will it happen?
I think it will. There's no doubt that there's a lot of families that need stimulus, and there's a lot of economies that need stimulus. The numbers, 240-odd thousand out of the US over the last few days. Daily counts in excess of 200,000. More than 20-odd thousand in Italy, for example. So this hasn't gone away. The storyline, whilst Australia is very much immune, the global picture is very, very dire. So that rally, do we keep that going? What is the 1 point or 2 points or 3 points that could derail things? And that's what traders need to be conscious of.
Now, we know it's not a normal year. It hasn't been a normal year. We know the signals aren't necessarily the signals to trade or not trade. So how do we? What do we need to be seeing? What are the big events that are going to kind of move markets over the next 5 to 7 days?
All right, we've got the ECB this week. So as far as liquidity, we've also got Boris Johnson and his team, Prime Minister, as what's going on with the Brexit issues. We've also got an unknown event being a little bit like a black swan, vote count, and where does the Biden/Trump election?
Sure, we got a contested election. Is it over, not over? Is it priced in? Is it not priced in? Could be a trade event.
It could be a trade event. I don't think it's priced in. From what I'm seeing, I just don't see any coverage in media, and I'm not here from a political standpoint. I'm here from a economic standpoint, what happens from a trading mindset. So I think traders have got to be conscious of those black swan events. If any market rallies ridiculously long, like oil's up the best part of 32% in the last few weeks.
Iron ore, trading at all, well, they're not all-time highs, but it's up there. And
absolutely.
It seems to be the thing that, if we talk in Australia for a moment, may well really seriously deliver some Christmas joy.
Absolutely. If you're a miner, you wouldn't want to be necessarily a lobster farmer or red wine grower. But if you're looking at the iron ore position, yes, very strongly bid up. Copper's up as well. So it's been a very, very good time as far as the price sensitivity is commodities. Oil also on the backdrop of that. So that US dollar's come under enormous pressure to the downside, Will. Aussie's at 74.3, 74.4. Easily, I think that, a 75 plus handle by Christmas. That's not being ridiculously bullish. It hasn't got long to go, but it's a long way from 70 cents.
So we talk about central banks driving the Christmas cheer, stimulus all over the world. We spoke about the ECB. We're talking about this chart here, which looks like these stocks are, well, these trends are just going north, right? So we've got liquidity boosting stocks, pushing the dollar down. Risks are still there. What matters?
I think the reason that we're seeing it and what matters is continued liquidity and continuing stimulus from major economies. And by the sounds of it, no one's going to back down. So Congress, ECB,
China.
China. Though China's, their numbers are, as far as COVID, are a different. We just don't get the numbers. We're not sure how many actually have COVID, or maybe they don't have COVID.
Maybe they don't have COVID. Maybe those numbers don't matter because they're managing perhaps in a different way.
Yeah, sure.
But again, cast back to this liquidity idea, the sentiment going into Christmas. Trading seems to be, it's a runoff period. We know that people take their bonuses. Typically, they're tallied up and calculated this time of year. So we see erratic trading. We see positions on, we see positions off. Is it happening this year?
I think it'll continue, Will. I mean, it's just been very, very long. I'm not, when I look at the conditions as far as the trading environment, it's been an enormously great time to be in markets for the last, 8 or 9 months. Everything's long. So, and US dollar short. So it just, these opportunities, this isn't a normal year as we know. So Let's see how it continues into 2021, and let's it's very hard to forecast out another quarter. I know that the growth out of the the Northern Hemisphere economies is going to be very, very crimped for that Q4. So unemployment, that underwhelming, as I made reference to the non-farm payrolls that came out Friday night, certainly not strong numbers, certainly not the 800, 900,000, around that 200,000 for that build over that period of a month. So what does Biden inherit? There's the next part. So there's, again, many moving parts to this, and for any economy to, come out of the blocks in 21, are we at all-time highs now? I'm not sure for the next matter of months. It's a little bit unknown.
And as any good coach will tell you, your performance counts, but your recovery counts a little more than your last performance.
Yeah, you've got to rest up.
You can't always win. You can't always win, right? So let's talk resilience in markets for a few moments, and perhaps ask the question: are we fit? Are we match fit? Can we actually trade into the 21st century in a proactive way, or actually do we all need a break?
Well, I think from the trading landscape, it's a 5-day-a-week business, 24 hours a day. There's no doubt that many traders, I think, have had a very, very successful last few months. And will that last going forward? Traders are looking at short-term events. They're looking at opportunities that present themselves. That black swan event that goes, oh, wow, we see the markets dip 10%, or we see them go up. That's what traders do for a living. And I think that's the exciting part of these markets. We just talk on fundamentals, but then we've got the seasonality, then we've got the technicals. We could talk for hours about this subject matter because there's so many, again, moving parts that go into making the cake.
Mate, the producers might get us out of here faster than that.
I think they probably would.
But listen, I'm just scanning some headlines here, and one of them says it's all up, down, under. Is that true?
Well, we've had a great rise. I mean, have a look. We're about 7 or 8% from our all-time highs, the Aussie market. You've got an Aussie dollar now sitting nearly at 75. You've got strong commodity prices. We don't have, thank God, I mean, it's a blessing not to have COVID numbers, and where our economy is looking pretty damn good. Pretty good. So how do we go as far as moving into 21? We're in a different frame, Will, than most other countries across the world, certainly across Asia, and very much against, Europe and the United States.
Pete, looking forward over the next few days and just, seriously positioning this week, what events are we looking for? Do we care about anything that's really going on, or we just keep our eyes glued on the screens and make the trades as we see them and don't stress them too much?
Don't stress too much, but look at the ECB. That's what I'm very much conscious of as far as their stimulus and whether they over-deliver or under. And then what's happening as far as we made reference to that, Boris Johnson and his team with Brexit, which is still a little bit of an unknown. And then where does the Fed play? Talks as far as numbers being released this week. It's a big data week. So we've got plenty of news and plenty of opportunities will be presented off that as numbers.
All right, if there's one piece of data that you're watching for personally this week, what is it?
I think the ECB. I think that do we see continued softness as far as US dollar? We know that everything's really valued in US dollar. And there you are as the chart. I mean, look at that. It's quite incredible, isn't it? Euro versus USD. It's getting stronger by the day.
So it looks like it hit its all-time highs in sort of 2008, and it's been trending down. Well, you wouldn't even call it trending down, but it's come off the all-time highs there and tracked horizontally there within that band, as you can see there on that chart. But look, it's tracking now, and it's tracking to the positive, as to what that's what the data would suggest.
Yeah, well, that US dollar has come under continued softness. We've nearly seen parity going back to around about 2017, a euro for a dollar. Now we're at 1.21. And what's the upside going to be? Are we seeing a 125? Any trader, if you're looking at that chart, you'd have to say, well, it's had an enormous rise from that 108 that we saw earlier in 20. Now we're at 121. There's your 13% move. It's possibly got some more upside. Hard one to vote against.
I want to talk about this UK-EU chart for just a moment. I mean, can they actually afford a no-deal Brexit?
I don't know whether they can, Will. That's a very hard one. I mean, we don't live in Europe. We don't live in the UK. We look at it from an onlooker looking in. I would dare say that there's been a lot of work, as an understatement, by all the negotiators to get to this point. Is it going to be pushed back? There's talk that Boris Johnson wants to push back on it. So it's just a work in progress. Over the next matter of a week or two, we'll get a clear understanding whether there's a deal or whether there's no deal. I don't think anyone can have a no deal. That really is going to be a lot of confusion to the market, and we're now looking at an internal market bill that's going back to Parliament. So that's the big swinging, out here somewhere that's creating nervousness to the Brexit and nervousness to the euro.
Pete, we touched on this earlier and covered it pretty well, but dollar devastated as markets pricing inflation is the chart. It's clear to see here the chart really speaks for itself.
Well, yeah, and on that, Will, you've got to be conscious as far as we speak about iron ore, we speak about all of those inputs, copper, commodities, nickel, oil, all being bid up and bid up strongly. That in turn creates inflation. Then the next part, of course, is you've had that very, very strong move to the upside as far as the euro versus the US dollar, and does that continue? So we've made enough discussion about that over the last couple of minutes. That really is again, another wild card. Do we see the US dollar say, well, that's enough. I've softened enough. I've dropped 13%. I'll just have a little bit of a Christmas rally reversal and put 2% on. They're the unknowns that any trader's looking at. Nothing lasts forever. No market just keeps on going up forever.
All right, Pete. Well, look, we've covered the data points as they were and what they are now and what we're looking at over the next 4 or 5 days. Any other points that we sort of really want to drill into today?
No, I don't think so, Will. I mean, the next week is going to be one of interest from that a US election standpoint. I believe the electors need to look at on the 14th of December. We're looking at what happens with the ECB this week. You're talking as far as domestically, does our market continue to climb? We've had 6 great weeks, and the Christmas rally with liquidity. So that's about it. I think we're not in a bad position on the 7th of December.
If you think back, and this will be the final question really for you today, mate, and I'll let you go, but if you think back over the last 5 years, is there an average sort of performance that you've looked at and seen in markets in that December-January period, or has it all been a little different? I mean, we'll come back to that opening comment really around the signals. What do they represent? Can we trust them? Are the signals that we know that we've been buying on historically, are they the same?
I think they're the same. Well, they're a different year because COVID is such a different beast. We've never been in these waters before. It's uncharted. So we understand it's liquidity. We understand that the central banks are all behind it, and how long it takes as far as that euphoria from a vaccine. Does that continue to move forward, or is it just the tsunami of stimulus that's going to be presented to the market over the next matter of a month or two that's going to keep it, bid up? So I this year really can't be compared to other years, and let's just hope 21 is for mankind a lot better year for us all.
Well, as we spoke about, let's hope Christmas is one of where the bells are ringing and Santa's delivering, and I think the market simply wants that liquidity.
I think so, Will. Thank you again.
Pete, good to speak to you. Thank you for being here, and we'll see you next week.
Cheers.